It has not been a dull month for silver so far, especially with what silver's price did today, but it's what you didn't know happened that I think is an even bigger deal. I'll explain why and how as we explore. Yes, quite a surprising turn of events for silver today. We're going to get into that later in the video, but first let's talk about what silver's price did today, and gold too. Things are looking up for gold and silver. I mean, literally and figuratively as well. If you've been paying attention to this channel, two big events that happened with gold and silver happened very recently. The video that I posted this morning, many did not see. We're talking about the largest gold trade ever, and it's a secret as to who did it. That video will be at the end screen linked, so I hope you will check that video out and share it as well. That's very important. And also reported about what Saudi Arabia has done. Their central bank has bought silver ETFs. That's right, that's a huge deal for a central bank to do that. I'll try to link to that video as well at the end screen of this video. That's very important news, and this should be shared far and wide. Well, what I'm going to be reporting on now is, I think, even bigger news than that. It's an unexpected event, and before we get to that, I want to remind you of channel sponsor Summit Metals. And everything I'm about to tell you seems to be bullish for silver's price, and gold's price too. But it does not necessarily mean it's going to go up. So keep that in mind before buying any precious metal from any company, including the channel sponsor. That's something that I want to make abundantly clear. Just because this channel is sponsored by a bullion dealer, Summit Metals, who does have great customer service and competitive prices, but also fast shipping, that does not mean that you should just run out and buy from them or any company because of what I say on this channel. Do your own research to be able to find out what's right for you and when to buy and how to buy, because no one really knows what the prices are going to do. Although I am not hiding the fact that I'm bullish on silver's price right now. In fact, I've revised my predictions since I've been right twice this year on silver so far in terms of where its price is going to go. I still think we're going to see it go up to $41 an ounce. But I could be wrong about that. Let's talk about what's happening here. Well, we saw gold hit a 5-week peak. It is now back comfortably above $3,400 an ounce moments before these markets close. And right now it's up 0.7 of a percentage point, up $23.70 to $3,421.20. That's less than $80 away from its all-time high when adjusted for inflation. Silver has a long way to go to get there, but it is now outperforming gold today. In fact, it is the top performing asset of the precious metals that are covered over on Kitco. It's up 50 cents right now, a 1.31% increase, a notable rise in price to $39.14. It got up to as high as $39.18 earlier in the day, and in the bid price it's above $39 too, and it's been holding on to this price for most of the trading day. Volume has been light most of the afternoon, and it's been kind of remarkable to see it hold on to that. Platinum and palladium are also up, with platinum being the second best performing asset here, at up $15 a day, a 1.1% increase moments before the markets close. The gold to silver ratio is trading at 87.62 right now. And so there are concerns with regards to the strength of the dollar. That's one of the things we're going to be talking about. That's one of the things that has led to the price of gold and silver rising today. But what has caused that? Well, it's supported by a softer dollar and safe haven flows due to ongoing concerns over the Federal Reserve's independence, so they say. Well, I tell you what, yes, it's rocking the markets there. The Fed's independence, because the Donald Trump has fired Federal Reserve Governor Lisa Cook, who has now just announced that she is suing the Trump administration in an effort to overturn the president's attempt to fire her, launching an unprecedented legal battle that could significantly reshape the Fed's long-standing political independence. The lawsuit seeks an emergency injunction to block her firing and confirm her status as a member of the Fed's governing board. And remember, the Federal Reserve is going to be voting to lower rates coming up in September 17th. So this uncertainty has led to precious metal prices rising. Now, this is the president's effort to terminate a Senate-confirmed Federal Reserve Board member is a broadside attack on the century-old independence of the Federal Reserve System, Cook's lawyer, Abby David Lowell, wrote in a court filing. The case could become the turning point for the 112-year-old Federal Reserve, which was designed by Congress to be insulated from day-to-day political influence. Economists prefer independent central banks because they can more easily take unpopular measures such as lifting interest rates to combat inflation than elected officials can. And this is according to the AP, who is not a very independent news organization, by the way. In fact, that's part of the problem. Nothing is independent anymore. What is independence? Everything is political, it seems. And by the way, the Federal Reserve has been political for a heck of a long time before Donald Trump inserted politics and political pressure, which, by the way, I fully admit that's what he's doing, and he shouldn't do that, but it is what he's doing. But the thing is that the Federal Reserve has been politicized, and he's calling that out. He's calling out we're the only first world nation that has interest rates this high. That's it. We're the only one. And so you tell me that's not political. But nonetheless, there's other reasons as well to keep interest rates up too. There's a good coaching argument one can make on both sides of it, but still, notwithstanding, understanding what's going on economically and getting into to that argument is something I'm not going to do right now. But that being said, if you look at the Fed Watch tool, it has increased the amount of participants who have probabilities for the September 17th Fed meeting, which is less than a month away now. And that is 87.2% believe they're going to lower rates a quarter point, with 12.8% believe they're going to leave rates unchanged. And that's an increased likelihood that they're going to lower rates than last time I reported on this. So it is something else. So that is what is making the dollar fall. The dollar index slipped. And it has slipped exactly right now as I record this video. It is down 0.25%. It was down 0.5% earlier in the day, but it's at 97.87. So those are the kind of things that cause a weaker dollar. And of course, the dollar strength against other currencies really is separate and apart from the value of the dollar, because it's getting devalued by inflation, which means it has weaker spending power, but strength in the global economy. And make it make sense is probably what you're asking me there. Well, that's because the dollar is still the most dominant currency around the world. About 58% of all international transactions and reserves made up of the dollar. It is the trusted currency, the most trusted currency in the world, even though it's losing value. And so when you come to understand that, there's a difference between the DXY, which is a measure of the dollar strength compared to the breadbasket of other currencies measured by the International Monetary Fund, and the strength of the dollar in terms of its purchasing power, which is a very different thing. Yes, indeed. So that's what's happening there. Now, gold has been climbing up quietly but steadily higher for over a week now, due in part to rising concerns about the Fed independence, Trump's pressure, spurring unease at the Federal Open Market Committee could cut rates more quickly and keep them lower for longer, which is good for gold, according to Tai Wong, an independent metals trader. Markets are currently pricing in a more than 87% chance, as we talked about here. Investors now await Friday's personal consumption expenditures data, which is a key inflation gauge for the U.S. Central Bank. Now, again, there's other factors that are coming to play with regards to price changes as opposed to inflation data, but that is something to keep in mind that helps people understand what's going on, that to cause prices to go up or down. Non-yielding gold thrives in a low-interest rate environment and during times of economic uncertainty. However, it didn't thrive very much when interest rates were low before. For many different reasons, it did go up for some degree, but for a long time during the lower interest rate environment, gold's price had come back somewhat, and same with silver too. But we're in a different world now than we were then. Things have changed very quickly, and there's a lot that is looking up for gold and silver nowadays than the other way around. and even the summer doldrum months. It turns out the summer doldrums that we're witnessing now is more or less gold and silver having a holding pattern of where they had been in the low 38 range for silver and $3,333 or thereabouts for gold. We've now broken above that, which means that we very well could see an unexpected second rally for these metals from now to the end of the year. And I think that would go in line with my prediction that silver could reach $41 and gold maybe $3,500 and north of that. Some had suggested we may see $3,700 gold. I may discuss that in another video sometime soon. There's a lot going on here for sure. But nonetheless, looking at silver again, has had a great quarter, but momentum slumped in August, and it's waiting for a spark. Something silver will take off like an antelope around $40. That might coincide with gold making new highs, according to Tai Wong. And so that's what's happening there, according to Reuters. Now, the other thing that not a lot of people are talking about is what just happened with silver. Just today, we saw it overtake Bitcoin in terms of its market cap. That's right. Looking at the top assets by market cap, we're going to talk about this for a little bit because this is important. Gold is by far the most valuable of all the assets and has been for a long time. It's at $23.351 trillion market cap, with its futures price at $3,477, and it's up 0.84% today, doing very well. Nvidia is far behind, but it's the second largest, and it's even ahead by a long shot of the other asset classes. It's to $4.3 trillion, and it's down a little bit today at $180.26 a share. Microsoft is far behind at $3.7 trillion, and Apple is behind that. And then you have Google Alphabet, who is the parent company of many other companies out there, including YouTube. And then you got Amazon. Now, Amazon is at $2.472 trillion market cap. Bitcoin was behind Amazon, but now silver has overtaken Bitcoin to be the seventh largest asset by market cap there, with a futures price of $39.72, up 1.3%. The publishing of these numbers by the company's market cap, and it is at $2.23 trillion. Amazon is at $2.472. So what's going to happen next, or what should we watch out for? Let's see if silver will overtake Amazon to be the sixth largest. And then it won't be that far behind Google Alphabet. Can you imagine if it beat Google? Man, that would be something. But even if it beat Amazon, it's not that far behind. But to be honest with you, with Bitcoin's pullbacks, it did have a bit of a recovery today, trading at $112,243 per Bitcoin as of the recording of this video or publishing of these materials. It is sitting at 2.235 trillion, whereas silver is barely above it at 2.236 trillion. But if we see silver move in an expanded or a new bull run, then watch out. We'll see what happens there. So let's pay attention to see what happens. I hope you enjoyed this content. I like to bring you the latest news in the world of precious metals. So if you enjoy what I do here, please subscribe to the channel and press the notifications bell so that you can be apprised of the latest content that makes its way across your device. So with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.